Hi, it's Lee Goldstein from 10 Minute Trades. I want to welcome you to my podcast, and it's another weekly wrap up from 10 Minute Trades. So sit back, relax. I'm going to try and do it in 10 minutes this week instead of 30 minutes. And I got my trusty coffee somewhere. I've already drunk about 30 cups today, and Dr. McDougall says don't drink any coffee. So I'm not taking good care of myself, which I should. So it's a typical week. We had events that traded well. We had trades that decisions were made that we wish we could change. We had trade decisions that we were very happy with. And we had market reactions that exploded and reactions that didn't even move. So it's just a standard, normal, very typical week at 10-minute trades. So let me show you what took place this week. Actually, this is a podcast. I'm not going to show you, although here's the deal with this podcast. We're going to put it on YouTube, and we are eventually, when we get out of beta, we're going to, put our podcast where everybody puts their podcasts. So in theory, a podcast is supposed to be audio. It's not video. But because we're a trading company, video is important, especially to our members, because they want to see what happens in the trade. So as I do this podcast, I'm going to attempt, like jumping off a building, I'm going to attempt to show the trades while I'm talking so people who are listening to the podcast have no idea that video would be a bonus. And our members will know that if they watch it on YouTube, the video will be there. So it's a dual purpose podcast, invisible video to the audio folks and visible video to our members. So enjoy it, and let's see if I can pull it off. Every week we create a schedule. It's a weekly schedule of the events that we're going to trade, events we're going to watch in our trade room, and then just events we're not even going to take in our trade room or do anything with other than pay attention to them and notate them for possible future trades. So this week, the first event was the Euro Flash GDP. It was Monday morning at 5 a.m., and there just wasn't any response from the market. Sometimes you'll get an event that you really think is going to move the market, and this particular event also had the German zoo economic sentiment. And there was what appeared to be, if you looked at a chart, that there was quite a significant move in the euro. However, if you actually watched a video of the event, which I do, I go through all the events, I make videos. If you watched a video of the event, you'll see that the euro barely moved for minutes on the GDP and zoo data. So there was no event really to trade. It was a non-tradable event. And that happens a lot with news. The next important event of the week was the US PPI. That's called Producer Price Index. That's a very inflationary report. And our typical daily market mover report was not working well over the past 3, 4, 5 months. We came up with a new setup, a range trade, and it was a very successful, explosive, powerful trade. So the US PPI with a new setup that we will use going forward was an excellent range trade. And that's something new. And again, as I said, we'll go forward with that new setup. It takes a lot of time and effort and testing to come up with new setups. And that's the key. You go back month after month after month. You test the new setup using Playback in the Ninja Trader platform, and that allows you to find a new way to trade. Our software has breakouts. It has reversals. It has one-click range trades. We have all sorts of interesting setups in our software, and we can go back and test those setups on the various market conditions and the news event called PPI, which gave us an excellent range trade. Every week on Tuesdays, we have an oil report called the API report. We also trade that as a range trade. That's been a family money trade that's sort of lost some of its luster lately. It's been trading not too badly, but this week it was tricky. We have rules for this trade. One of the rules is if it bursts and it puts you in the trade, or if it would have gone 7 to 9 ticks, then you're supposed to stay in the trade. If not, if it's a dull reaction where you get filled and it only moves a tick or two, then you're not supposed to stay in the trade. And what happened this week is there was slippage. So it sort of did a move that might have been 7 ticks if there wasn't slippage. So it was a little bit confusing. And if the rule is if the trade is dull, take the reversal. So here's the two rules. You've got a burst, 7 ticks or more, stay in the trade for continuation in that direction. A dull fill where it fills you and doesn't move more than 1 or 2 ticks, get ready to take a reversal and put that reversal on once you realize it's a dull trade. It's also a tricky report because the news is not public for 5 minutes until the news is released. In other words, the report comes out at 4:30. The public doesn't know what the results of the report are until 4:35. So it's a trade where we don't know the news results. We're trading the market action, and we've come up with these rules based on many, many months and months of market action. And it's been working for us. This week, because there was a little bit confusing in the signals, I was able to grab a few ticks of profit, 30 bucks. But there was a possibility to take more if you were really, really smart. I didn't see the slippage as being a method of changing direction. So a little bit tricky this week on API. We trade it every week. It's a great report. Let's move on to Wednesday. Wednesday, we've implemented our British CPI daily trade report because it's been starting to move. But I'll tell you the truth, if it moves the way it moved this Wednesday, then we're going to probably take the report off because British CPI virtually did nothing on the news. There was an offset. What an offset is the difference between the expected news and the news result. So if you have 1,000 jobs that you're expecting and 10,000 jobs are created, that's a big, big offset. In the British CPI report this week, it was a very tiny offset. Tiny offsets don't have usually a large move. That's why it was dull this week. U.S. retail news and Canada CPI traded together. The Canada CPI report had a very nice burst in its price action, and it was a profitable little trade. The U.S. retail news, we used what we called the trap trade format, and the U.S. retail news, the offset, was actually not that bad. In other words, they were expecting, it was very positive actually. They were expecting 2.1% increase, and they got over 3.8% increase in US. And then the Canada CPI was also positive, not huge, but the US retail just did not have a very big response, possibly because our orders were too far from the current price on the trap trade this month. So we didn't get filled. And on the other hand, our Canada trade was perfect, and we did have a profit on that trade. So it always depends on your trade setup, and trade setups can get modified over time if the market reactions warrant it. Now, there are many reports that we trade that people never even heard of them. If you're not an expert or if you're not trading with us in our trade room, you may never have heard of capacity utilization and industrial production. And we found a really good NQ NASDAQ futures breakout for this trade. It's an unusual time for the trade. It trades at 9:15 in the morning, right before the market opens. We'd been looking at gold for this trade, and we decided to look at the NQ futures, and they had an excellent trade this week. We were testing it this week, looked like a very good explosion, and that was one trade where I actually wanted to get my decision back because I really wanted to trade that live, and I should have trusted my testing on that one. So capacity utilization should have been a big winner, okay? And sometimes, you'll make a decision and you'll want to change it, but that's trading. Now, crude oil can be very challenging to trade. It moves very fast because the news absolutely affects the crude oil futures in a dramatic fashion, and it's inconsistent. It doesn't respond the same way every week. Sometimes you can take an immediate reversal. Sometimes you can take a breakout trade. This week, the price broke out and it looks like it stopped. It tried to hit the target. It never gets to the target. The price reversed, and it was a stop out. In other words, traders who traded it live would have lost money. And it was a very bullish news offset, meaning there was a lot of oil around available when they were expecting oil to be used up. That was a big offset in a direction that wasn't expected, and it caused a large move and a quirky move in the oil index, and that may have led to a stop out for some traders. There's also a reversal trade that this particular week, if you had taken an instant immediate reversal trade, you might have had an opportunity to make money trading the crude oil reversal. The after 3 minute after news trade that we do so often in the trade room would not have worked today because the news was too bullish and it did not allow oil to have a reversal from the direction of the trade. Now, I know it's hard to believe it. We're still on Wednesday. We had 7 events on Wednesday, 5 separate trade rooms. The bond reports have been very difficult to trade. The ZB, which is the futures, the instrument that we trade, is low liquidity, not very good at filling orders, very difficult. And what happened was it was actually a big move filled with slippage, almost impossible to make money, and it took us out of the trade with a loss. Our gold setup did not respond immediately, so we didn't take our secondary gold setup on bonds. Bonds have been tough, and we're going to have to make a decision about them. Well, everyone's still talking about the Fed. You know, you've got the news going on where Biden's trying to get his nominee for Fed chairman, and also they're trying to get other people nominated, and it's not going well. But there's a lot of attention on the Fed and on the politics of the Fed. The Fed minutes were this week. That's the report that comes after the FOMC statement. The statement is when the Fed decides to raise or lower interest rates, and of course they make a statement. And the FOMC minutes are a follow-up report to that meeting roughly a week to 10 days prior. So the Fed minutes have gotten much more attention, and we had to find a new way to trade them because our last 6 Fed minute trades did not work. So we found a new range trade for the Fed minutes. Very, very good setup, and the key with the trade was to wait. Sometimes you have to wait 2-3 minutes before you get filled. Very similar to what happened in one of our CPI or PPI trades of the previous week. But the Fed is a very challenging trade, but we waited and we made $450 on that trade because we were patient and able to enter well after 2 minutes after our range was created. So again, a new setup, the range trade for FOMC minutes. Going forward, an excellent method and a new way of trading it. Over the past 6 months, one of our most exciting reports has been Australia's jobs report. It's been exploding. It's been a family money trade at times. And this week, even with an excellent news offset, more jobs were created than they expected. There was no move. I've never seen it where Australian jobs didn't move. We use the trap trade now on Australian jobs. Even if we had used the breakout setup, no fill, there was no interest. Very surprising, no fill on Australia's job report. Now, every week there's always a trade, or sometimes 2, that I wish I could have back and redo them. So I said before that if I could have redone the capacity utilization, which I forgot to say is now really considered industrial production. It's called capacity utilization industrial production, and the industrial production part is more important. But I'd love to have that back and trade it live. But my biggest regret of the week, and every week you're going to have regrets in your trading. You're going to have your winners that you're happy about. But on Thursday, we had building permits with Thursday jobless claims, unemployment claims, and Philly Fed. Our cancellation rule, every trade has a cancellation rule. If you don't get filled after a certain amount of time, you're supposed to cancel the trade. The cancellation rule was 10 seconds on this report. And I know in my heart that this particular news takes longer than 10 seconds. But I waited 20, and I had done some testing where the cancellation looked like it might have saved you from having a bad trade. So even though I knew in my heart I should not cancel this trade under any circumstances, after about 25 seconds, I canceled the trade. And then at that exact moment, the price action started moving up powerfully to the upside. It would have hit all my targets. It would have made us quite a bit of money. That's the trade I would like to take back. Every now and then, I mean, it's really been bugging me if I'm really honest, because the price really went up a lot. I had a large target, a 40 or 50 tick target that's over $250 per contract. I knew I shouldn't have canceled it, but the trade report said 10-second cancellation. That just doesn't hold through our experience. I knew in my heart that I shouldn't have canceled the trade, and the moment I canceled it, 3 seconds later, it burst and would have easily hit my target. That's the trade I'd like to take back for this week. Building permits, housing starts, Philly Fed, and Thursday unemployment. Canada's retail trade, we were planning on watching it. I was even thinking of having a trade room for it, and it just had no move. There was an offset in the expected news, but Canada retail is just not having any effect on the market. And then our last event of the week is existing home sales, which I would expect the market would look at because it does have inflationary value. Now, even though this report would have strong inflationary value, I had done a lot of testing and it didn't test well. We've been trading gold on this report, and it's a coin toss, we call it. 50% winners, 50% losers. That's not a great way to make money. You want 60%, 70%, 80% on the awesome reports. Gold hasn't been moving much. Our targets are small on the daily report. So I did some testing, and the testing looks real good for an NQ range trade. And again, we're going to go forward using an NQ range trade on existing homes. As long as the market will pay us to trade it that way, the testing looks great. And we'll probably keep an eye on the gold breakout for existing homes. But even with a good offset like we had today, the market just wasn't that interested. Now, there was a wrinkle in the market today. You've got the Ukraine situation with Russia. The world is on edge watching the situation in the Ukraine. It's having a very large effect on the markets, which sometimes overshadows news moves. So it's important to understand. Sometimes you expect something to happen and it doesn't. Sometimes world affairs overpower a news move, as I was saying. You never know what to expect. It's part of the fun of event-based trading. It's why I love doing what I do. And I want to thank everybody. Of course, I went over my time limit. I'm almost double, but at least not 30 minutes. But it's important to go over all the events that we trade. There's education that you can get and glean from these podcasts. So I hope you enjoyed it. I hope the folks that are watching realize that I had some videos going while I was talking. And I hope the folks that are on audio, you could watch this on YouTube and catch another flavor to the podcast. So my name is Lee Goldstein. I'm the trading director at 10 Minute Trades. I want to thank you all for watching, and I'll see you next week at my weekly wrap up. Take care and have a great weekend. See you soon.